Welcome to the deep dive. We take a look at your stack of research and try to boil it down to the essential insights.
hmm
Today, we're diving into a mountain of material, all about the Royal Bank of Canada, RBC. Looks like somebody is serious about making an informed decision here.
Right.
So our mission today is to figure out if RBC stock is a good fit for your portfolio. To do that, we'll be examining its financial performance, its market position, and even delving into some of its sometimes controversial history.
Yeah. Some interesting stuff in there.
Let's start with a quick trip back in time. RBC started in 1864
Wow.
as the Merchants Bank of Halifax Financing, would you believe? Fishing and timber.
A far cry from the global giant we see today.
It's had its share of mergers and acquisitions, even a brush with nationalization in Guyana.
Yeah, that's a story for another time, perhaps.
Now for the nitty-gritty. You've provided some really interesting data. RBC is currently the largest bank in Canada by market capitalization, serving over 20 million clients. They've got over 100,000 employees
Wide.
worldwide and pulled in a hefty CA, $57.34 billion in revenue in 2024, with a net income of CA, $16.24 billion.
Pretty impressive.
You've also provided some data on RBC's market share,
Yeah.
which is dominant in Canada and growing in other areas, like the U.S. and the Caribbean. This gives us a good sense of their competitive landscape.
It does.
Mergers and acquisitions, classic signs of growth. RBC's acquisition of HSBC Canada is particularly interesting,
A big one.
though it does come with some strings attached from the finance minister. They've also made moves in the U.S. with the purchase of City National Bank and in the U.K. with Brew and Dolphin.
A lot of activity.
So we've got some information here about RBC's innovation pipeline. This will give us a sense of how they're positioning themselves for the future.
Absolutely.
RBC offers a wide range of services, from personal banking and wealth management to capital markets and insurance. This diversification can be a strength, offering various revenue streams.
Sure.
Okay, let's talk dividends. RBC has a history of paying dividends and currently boasts a 3.40% yield. They pay out quarterly and have a payout ratio of 52.14%. They also have a dividend growth rate of 2.44% over the past year, which is important for investors seeking passive income.
Certainly.
You've also given us data on RBC's share buyback program, which, along with dividends, demonstrates their commitment to returning value to shareholders. For the quarter ending October 31st, 2024, the amount was negative $104.65 million.
Interesting.
We've got a lot of valuation data here.
Yeah.
Price to earnings, price to book, and more. This is where we compare RBC to its peers and industry averages to see if it's attractively priced.
Right.
How does RBC fare on the environmental, social, and governance front? You flagged some concerns about their fossil fuel investments,
Yeah.
which has sparked controversy. But there's also some positive news about their support of Canadian athletes and cultural events. RBC is a major player in the Canadian and global economy, so we need to consider the broader economic context and potential risks.
Of course. It's a tough one. It really is, a balancing act for investors, weighing those financial goals against their ethical considerations.
Let's shift our focus a little bit to RBC's impact on the economy. As a major lender and financial institution, their decisions can have a ripple effect on individuals, businesses, even governments.
Oh, absolutely. Their lending practices can influence consumer spending, business investments, and even government policies. They're a major player in the economy. I mean, they fuel economic activity, everything from providing those mortgages to individuals to financing those large-scale infrastructure projects.
That level of influence comes with responsibility. How does RBC navigate the regulatory landscape, particularly in light of these recent acquisitions?
Well, I think the HSBC Canada deal with the conditions imposed by the finance minister is a prime example of just how closely financial institutions are scrutinized. Governments have a big interest in financial stability, protecting consumers, right?
So while RBC is pursuing growth and expansion, they're also operating within this complex web of regulations and expectations.
Yeah. Exactly. And all of that. New regulations, changes to existing ones, political developments, it can all have a real impact on their ability to operate, to grow, and ultimately, generate profits for their shareholders.
Yeah. So let's circle back to that original question. Is RBC a good fit for your portfolio?
Well, I think we've uncovered a lot to think about.
Yeah.
I mean, on the plus side, they have a long history of growth, they're adaptable, they've got a dominant position in Canada and a growing global presence. Their financials look pretty strong, and they're investing in innovation to stay ahead of the curve.
They're also demonstrating that commitment to returning value to shareholders through those dividend payments. and share buybacks.
Right, but of course there are those potential downsides. Their investments in fossil fuels will be a deal breaker for some.
And the economic picture, it's constantly changing. Things like rising interest rates and inflation could impact their future performance.
It's true. So I'd say the decision to invest in RBC, it really depends on your individual situation, your goals, your risk tolerance, and of course your personal stance on things like ethical investing.
And this deep dive, well, it's given you a really good understanding of RBC, but it can't replace professional financial advice.
It's always a good idea if you're not sure about something to speak to a qualified financial advisor. They can look at your situation.
Now, let's talk about something that's absolutely crucial for any financial institution in today's world: digital banking.
Yeah, RBC has been busy. They've been making some big investments in digital platforms and services. I'm talking mobile banking apps, online investment tools, even partnerships with these fintech companies.
It's a smart move.
Yeah,
This push toward digitalization is a way to respond to changing consumer behavior and the rise of all this new financial technology.
absolutely. It's all about convenience, accessibility, providing a seamless banking experience that meets the needs of customers today.
But the question is, are they just keeping up with the competition? Or are they actually innovating, offering something truly unique?
That's what investors need to figure out. It's not enough just to look at the headlines. You got to dig deeper. Look at the specifics, the features they offer, how easy their platforms are to use, and probably most importantly, their security measures.
It's clear RBC is serious about digital banking. But time will tell if their efforts translate into a real competitive edge and if they're able to attract a new generation of tech-savvy customers.
That's a topic for a whole other deep dive.
We've covered a lot of ground today. We started with their history, how they got to where they are now, their financial health, their dominant market position, all those acquisitions, and their efforts to innovate in this digital age.
We talked about the pros and cons of buying their stock, the dividends they offer, their share buyback program, and even the challenges they're facing on the environmental, social, and governance front.
And of course, we touched on those broader economic trends that might influence their future and the vital role they play in the financial world.
We really hope you found this helpful and that you feel more informed.
Absolutely.
Yeah.
It really is fascinating to see how RBC is balancing, that long-standing reputation as this traditional financial institution with this need to adapt and innovate in the digital world.
It's a tough balance. They have to keep their existing customers happy, but at the same time, attract those younger, more digitally savvy clients.
It's a challenge a lot of established companies face. So what can we learn from how RBC is approaching this?
Well, one thing is clear. Embracing innovation. It's not optional anymore. If companies don't adapt, well, they risk becoming obsolete.
But it's not just about adopting the newest, shiniest tech. It's about understanding how that technology can be used to improve things for their customers, streamline their own operations, and create new growth opportunities.
Right. It's about being strategic. And I think RBC gets that. I mean, their investments in digital banking, their mobile apps, their online investment tools, those partnerships with fintech companies, it's all about giving customers what they want in today's world.
We've been focusing on the facts and figures, financial performance, market analysis. But investing, it's not just about the numbers.
It's true. It's also about believing in the company, their vision, their leadership, their ability to deal with the challenges and opportunities that are ahead.
So if you're thinking about investing in RBC, ask yourself, do you believe in their story? Do you trust them to create value over the long term?
Those are the big questions. They go way beyond the balance sheet.
We've reached the end of our deep dive into the Royal Bank of Canada. I hope you found it informative.
This is really just the beginning. Keep doing your research, your due diligence.
And if you want to dive deeper into other companies or explore different financial topics, check out our YouTube channel.
We have a whole bunch of content there. Everything from stock analysis and market trends to personal finance tips and investment strategies.
We put out new videos all the time, so make sure you subscribe so you don't miss anything.
And if there's a particular stock or company you want us to take a closer look at, just leave a comment below.
Thanks for joining us on The Deep Dive.
Happy investing!